Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'een. Excellencies, distinguished guests, ladies and gentlemen, on behalf of Accounting and Auditing Organization for Islamic Financial Institutions and Islamic Development Bank, I welcome you once again to the 17th Annual Islamic Banking and Finance Conference, which is being organized on the theme of economic resilience and governance in disruptive times. I'm sure all of you would agree that we had a very interesting session yesterday. It was a very good day where we heard a number of keynote speeches, a number of discussion points on various angles in terms of economic resilience, on food security, on climate change, as well as we had the last session on how to integrate Islamic social finance into Islamic commercial finance. Alhamdulillah, we had more than 500 people present in this hall yesterday, and we hope that we'll have an equally good turnout today as well, inshallah. Alhamdulillah, we are thankful to all our speakers who have traveled far and wide to join us. We had more than 35 speakers for this conference, and we are thankful to our partners and sponsors without whose support this conference would not have been possible. Thank you to all of those who attended yesterday, and inshallah we do hope that the sessions today will be equally good. Today we have 4 sessions, 3 before the lunch, and there is 1 after the lunch. The first session is on developing resilience. It's related to takaful. The second one is related to capacity building within the Islamic banking and finance industry. The third session is on Islamic finance windows. And the last session, the last panel discussion, is on emerging financial technologies or fintech opportunities and challenges. We have with us a number of regulators, policymakers, and leaders within the global Islamic banking and finance to discuss these topics in detail. We also would have one presentation today on one of a very important project of AAOIFI related to alternative Islamic benchmark rate. Now, before any further ado, let us begin the first session of the day, and that is developing resilience, takaful, opportunities, challenges, and the need for inclusive reporting and disclosure. The chairman of the session is Dr. Bello Lawal Danbata, Secretary General of Islamic Financial Services Board in Malaysia. I welcome Dr. Bello to please join me on the stage. Thank you. Our first panelist for the session is Mr. Darrell Scott, financial consultant, former member of International Accounting Standards Board in the UK. I welcome you. Please join me on the stage. I also would like Associate Dr. Yusuf Dink, Board Member, Insurance and Pension Regulation and Supervision Agency, Turkey, to join me as well. IPRSA has also become a recent regulatory member of AAOIFI, so we're glad to have them on board. Our next panelist is Mr. Muhammad Kashif Siddiqui, an expert in insurance and takaful and works for Capital Market Authority in Oman. I also would like to invite the practitioner's perspective, and that's very important always, and it is Mr. Azim Pirani, CEO of Pak Qatar Takaful from Pakistan. I hand over to you, Dr. Bello, to carry on, inshallah, the discussions.
Thank you very much, Dr. Rizwan. Bismillahir Rahmanir Rahim, wa salatu wa salamu ala Sayyidina Muhammadin wa ala alihi wa sahbihi wa sallim. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh, and a very good morning to all of you. First of all, I would like to extend my sincere appreciation and gratitude to the IOP for this invitation for me to be part of this important global event. I'm also very grateful to our council members who co-organized and hosted this event. Definitely the Islamic Development Bank and the Central Bank of Bahrain, who has been the council members of the IFSB and who has been steering our activities, who jointly support this event. So I sincerely thank them as organizers. I would like to also express my sincere appreciation to all the IFSB members and IOP members here present, because I'm sitting here as a board member of IOP, at the same time also the Secretary General of the IFSB. Now, having said that, yesterday we had a wonderful discussions and a very great sessions that we had looking at, apart from the guidance and the insight that were given by the keynote speeches. I believe the session that we have on food security, on climate risks, as well as on social finance has been very, very useful to addressing the conference theme. When we are talking about resilience, we are talking about economic developments, post-pandemic and geopolitical tensions. I think this is a very timely theme of the conference, and I think we have all the expertise here that will be able to give us some important takeaways that we'll be able to use them as part of policy development as well as product development and regulation. Now, for our session, which is actually focusing on the resilience of the takaful sector, we try to look at the opportunities, we try to look at what are the challenges, and then being an IOP conference, we know that we currently have an issue with regard to the applicability of the IFRS 17. This is related to the presentation and disclosures, because the uniqueness of takaful sector is different because of its specificities related to Islamic finance. We have certain transactions that are not particularly available and visible in the conventional insurance practice. Particularly when we are talking about Qadr Hassan, they don't have anything like Qadr Hassan. We have issues like Waqaf, Islamic social finance, and even the models. We have various models of takaful. There are quite a number of structures that we have, which the conventional insurance doesn't have. So this makes this discussion very, very essential. And we know prior to the pandemic and the fourth industrial revolution, which is basically the accelerated digitalization of the global financial services, the insurance company, including the takafuls, they do conduct due diligence, understand their customers based on the engagement and discussion that they have. Now we have a big data that gives us the opportunity to understand customers that are not existing and a lot of opportunities that we believe with the big data the takaful companies can actually leverage on, and then the resilience of the takaful sector in the contributing the economic development can be enhanced as part of the opportunities. Now, to discuss this for our session, we try to, as much as we can, we are blessed to have a group of experts here who are very, very well experienced, and they are practitioners in the takaful sector and also in the development of standards and policy. We are fortunate to have Daryl Scott here. So he is one of those behind the IFRS 17. So I'm just exposing you, Daryl, so that anyone can ask him questions as you wish, because he created and pioneered the IFRS 17 that created a challenge to certain jurisdictions whereby takaful institutions are requested to comply with the IFRS. Now, for this discussion, we have in our session Daryl Scott, who is the financial consultant now and a former member of International Accounting Standard Board's ISB in the United Kingdom. We also have Associate Dr. Yusuf Dink, who is a board member and at the Insurance and Private Pension Regulation and Supervision Agency, IPRSA of Turkey. We also have Mr. Azim Firani, who is a CEO of Pakistan Qatar Takaful, which is a takaful, full-fledged takaful company that has been existing for quite a number of years in the Republic of Pakistan, Islamic Republic of Pakistan. We also have Mr. Muhammad Kashif Siddiqui, who is a former regulator and currently still a regulator as an expert in insurance and takaful, working with the Capital Market Authority in the Sultanate of Oman. So we have quite a range of experts in this panel, and I believe with the topic of today, where we are trying to look at the the opportunities, the challenges, and then what are the need that we have in having an inclusive reporting for the takaful sector compared to the insurance, so that the takaful company's financial statement can be comparable and can be assessed by the investors and the users of the financial statement, so that they can make a reasonable sense, so that they are not at a disadvantage. Now, our session will definitely focus on we are talking about the opportunities and the challenges. We all know takaful has a lower penetration rates compared to the other segments of the Islamic finance industry. Based on the IFSB stability report, if you have the opportunity to download that, the takaful sector still constitutes 0.8% of the total global Islamic finance asset as of 2021, which means out of 3.06 trillion US dollars that we have, takaful is only 0.8%, which is about 24 billion US dollars. And this is really of a concern. Even though we have leading jurisdictions like Saudi Arabia, Iran, and Sudan who have the insurance sector to be 100% takaful, we still have this lower asset side. So we would like to understand, perhaps in this session, why this lower penetration rates and the lower in terms of asset size. This is something that we are all interested, even though the IFSB stability report also highlighted the year-on-year growth for the takaful sector is 4.8%. But that 4.8% is not like actually moving at a speed that we are expecting at the industry. Now, the second aspect of the discussion will focus more on the innovations and accelerated digitalizations that give the room for opportunity to grow the takaful sector. This is something that we feel that is very, very essential to be discussed, and especially we have the regulators, we have the market players who are takaful operators in this panel, and then lastly we touch on the financial reporting and disclosure aspect. Now, let me start with perhaps Darren. As someone that is, you are involved, both conventional and takaful. You are now a consultant. You are involved in takaful. You have been involved in insurance for many, many years, all your life. And then this lower penetration that we see in takaful, what do you think? Whose fault do you think? Is it the regulators or the market players? Are the regulators not providing the relevant regulatory framework that will serve as an incentive to drive the industry forward? Or is it the takaful operators that you think they are not really putting the efforts to really drive the industry forward by coming up with quite a number of, financial literacy and awareness, as well as new products in the industry? Whose fault do you think? Darren, please.
Good morning, everybody. Thank you very much for that question. So I always say you should never introduce me as the father of IFRS 17 without first showing me where the emergency exit is. And I think now you've also asking me to blame one half of the audience or the other half of the audience for the difficulties. I think, as you mentioned, I spend a lot of time working on conventional insurance and with takaful insurance, and most of the time I spend working at the moment is with emerging economies, and I'm drawing a lot on the emerging economy experience. So I think the starting point really, when you're thinking about penetration of insurance products relative to other Islamic products or other financial products, the starting point is to understand that you are trying to sell to a market that very often in the emerging markets doesn't particularly believe in the product that you're selling. That belief comes from a couple of things. It comes from the fact that emerging markets tend to have a higher component of community cohesion. And so insurance product is a product where you need to be bailed out of a problem, you need to have a problem solved for you. In jurisdictions, in emerging markets with social cohesion, what you find is you first can look to your family, then you can look to your community. Very often you can look to the religious organizations or institutions around you to help you. And so for many people in emerging economies, insurance isn't front of mind because there are these other parties you can rely on. I think also people don't necessarily see insurance as a want-to-have type of product. It's what I've often referred to as a grudge product. What I mean by that is nobody in this room wakes up in the morning and says, oh, I really want to get an insurance product. It's not something we get excited about. Banking is exciting because banking allows me to obtain an asset that I wouldn't otherwise be able to attain, or it allows me to use my card in various places. Insurance doesn't provide any of that. Insurance is also probably the only product in the world that we buy and hope we will never use. Because the nature of insurance is typically you don't want the event to occur that you've bought the insurance for. And that means that if you are in the space of an insurer, be it a conventional insurer or a takaful insurer, you have to be very aggressive in the way that you present your product, in the way that you educate your market, in the way that you get your name out and your message out to your market. And that, I think, is an area where we see both, in emerging economies, both conventional insurers and takaful organizations being slow to move. And I think where there needs to be a lot more activity happening. But then I think the regulators also share some of the blame. So I'm not just going to blame the takaful operators themselves. Regulators, by their nature, favor market stability. You want a stable, strong market. You don't want any excitement. You don't want any challenges in your market. And so that means you tend to favor the existing incumbents over new entrants. You tend to favor the big balance sheets over the new startup balance sheets. You tend to favor the big brands over the smaller brands. And a lot of regulatory structure is built around favoring, working with the bigger names and not working with the new entrants.
Thank you. So, but what do you think of the market players? Do you think they are playing their role? Because, I mean, it's good that you highlighted is about the belief and the consumer behavior, basically. People doesn't really feel the necessity to go for takaful, and the regulators are focusing more on the stability and resilience of the industry rather than, pushing the product forward. So, I mean, is it because the market players or the takaful operators are doing, do you think they are doing what is expected of them? They are doing enough?
I think certainly takaful operators can be doing more. I think they should be doing more about lobbying governments, lobbying regulators to make sure that they are given the appropriate space in the market. But maybe even more importantly, I think they should be doing more about educating the market to understand where and how insurance products or how these sort of standby products actually operate. And I think it's interesting that in a lot of emerging economies, insurance-type products really get their start when you have compulsory products introduced like vehicle insurance and the like, and even pension products. Because what that does is it gives people the opportunity to understand an insurance product in a situation where they need to have one rather than when they need to actually go and make a decision on their own to do it.
Well, your final comment on this question. Your engagement with the takaful so far, the takaful that you have engaged, the marketplace that you have engaged, what do you think that the market or the takaful operators should focus on in order to drive the penetration?
Education of the market.
Thank you. Thank you very much, Darrell. Perhaps we now move to regulator. Perhaps if you agree with what Darrell has mentioned, I will start with maybe perhaps Mr. Muhammad Kashif, who is an expert in takaful and now working with the Capital Market Authority of in Sultanate of Oman. Are the regulators meeting the industry's expectations in pushing the greater takaful? You had just what Darrell just said. So I don't know. What's your perspective and take on that?
Yeah. Assalamu alaikum. Thank you, Mr. Bello. Actually, the regulator's responsibility is not to regulate and supervise the industry only. The ultimate responsibility also to promote and develop the market. So, but Mr. Darrell very rightly said, is actually as a proactive approach, the industry has to come up front first with their models and their channels and their awareness programs, and behind the scene, the regulators are in a supporting manner, so that they can give the level playing field to the market and to regulate in a way that there must be some resilience available in the market and to have a clear transparency in the reporting. That's how the regulator can support. And not only this, for the takaful market, regulator has been supporting in many different areas. For example, we know that there is awareness is really a challenge, because even in the Muslim populated countries, we see the lowest penetration even. So why people are believing that because of the faith that the insurance is not permissible under Sharia? So, but the takaful awareness is not there. Otherwise, they can have a higher take-up in that country. So, what the regulators can do, and in many jurisdictions we see that the regulator has announced window takaful operations. Actually, what is the idea behind that? Because the insurance companies has already a setup around the globe, and also in those remote areas even where the new entrants as the takaful cannot approach. So it is a better idea to allow windows so that it will create a market through awareness program. And Mr. Azim Prani, who is CEO in the takaful, Takaful Pakatra is a full-fledged takaful company.
I'm not sure whether Azim is agreeing with what you are saying, but maybe perhaps you can learn your points.
Actually, you know what happened? Why he might have a disagreement in the way the window should be allowed first before they allow full-fledged companies. Okay, but in different countries, it happened that the full-fledged companies are announced upfront, and then later on the windows are announced. Actually, windows were announced. Indonesia did the right thing. Actually, they announced the windows and they give them some time to close so that every company must be subsidiary as a full-fledged takaful company, because awareness is already created. So the regulator has to plan actually.
I mean, allowing windows has a lot of concern, especially we had in a number of jurisdictions. One of the most recent jurisdictions is actually Turkey.
Yeah.
So where the conventional insurance, they have so much advantage over the takaful operators because they have wider number of branches,
yes,
more capital,
yes,
more human and resources, as well as they have greater efficiency in terms of the quality of services that they have. So when you allow them to open windows, definitely they will take and eat all the market share that the takaful operators currently have. So that has been a concern in a number of jurisdictions. Now, what we are saying, or the question that I'm asking you, whether you believe the regulators have done enough with the expectation of the industry compared to because you mentioned education. Yes, education is very, very important, but is it are the regulators really pushing the education on takaful, or is it not what they are not pushing because it's not their responsibility alone?
Yeah, for instance, I have been working with the Pakistan regulator. I developed the takaful rules there. So we tried to put some through regulations. For example, we made a compulsory training sessions within takaful and for the market as well, that they have to create awareness through windows also. And ultimately, the windows should not be long forever. They must have some time period to stop so that they can take up all the matter with the full-fledged takaful companies. And not only through windows, there are lots other areas the operators have stepped in. For instance, because the large capacity is not available in takaful, okay? So sometime to promote the takaful companies, whether they don't have the takaful coverage available, sometimes regulators allow them to go for the reinsurance so that at least they must have some takaful companies businesses there for the large risk. And not only this, in some countries we have allowed the window re-takaful as well. For example, in Sultanate of Oman, just a couple of months before, we have issued one framework so that not for the companies they can allow window, but we allowed the window re-takaful operation so that to create the capacity so that the takaful company can earn benefit out of it. So that if there will be large capacity available in the market, so that the takaful company can run more businesses. Otherwise, the player, the policyholder will seek that, okay, the financial capacity with the takaful company is not that much, so let's go with the conventional. So if the capacity will be there, so it's our responsibility as a regulator to create the financial capacity and the soundness. And the regulator has been, in order to create confidence of the participant and policyholder, we are enforcing so much legal issues, for example, legal compliances issues, for example, Sharia governance framework. It is very important so the customer can be satisfied that yes, in the name of Sharia, this company is running and operating in a very Sharia compliant manner. So we developed a Sharia compliance governance framework, which requires the Sharia board in the regulators level, in the companies level, Sharia external audit and Sharia compliance officer. These are all governance framework for the Sharia compliance. And not only this, we are issuing many kind of the other regulations, for example, to create a financial soundness, different type of the solvency, nowadays a risk-based solvency regime linked with the capital's adequacy. And also we have introduced so much about the minimum capital requirements so that the financial strength of the company should increase, so that the financial capacity can build in the market. We are trying our best, but Mr. Daryl rightly said, it's actually first the operator has to come up, and then they need support. And for that purpose, we are very much open to listen to the market, and we are very much happy to listen and act upon it to support the industry. But they must do, some lobbying. Yeah, rightly said by Daryl.
Thank you very much, Brother Kashif. I think the dilemma, from my own understanding, because in the past we have conducted a number of research on Takaful, and the dilemma that the Takaful operators usually have in terms of pushing the consumer education or financial literacy related to Takaful is that they have a dilemma whereby are they going to use their shareholders' funds or they are going to use the Takaful policy holders fund. So because conventional insurance, you are buying a premium, so you own these funds, so it's like they can go to any extent and promote this, So the education part is something that I believe the regulators should come in as well. We don't have issue in terms of the infrastructure related to regulatory frameworks, supervision frameworks, and guidelines. That's quite robust in many jurisdictions. But I think, as Darrell highlighted, it's more on the consumer education. Who are the customers for them to be able to come forward and drive the industry forward? But maybe perhaps, Mr. Azim, you are a market player. You are CEO of the Takaful, a very important Takaful institution in Pakistan. So did you agree with what Brother Kashif is saying, or you have your own opinion on this? And why do you think, why can't the Takaful operators take the necessary steps to bring a more need-based kind of products that will drive the industry forward?
Bismillahirrahmanirrahim. Assalamu alaikum. So, I agree with both Daryl and Kashif to the extent that yes, the Takaful operators need to do more. Obviously, it's in their direct self-interest to do more. But let's be very honest. The vast majority of the Muslim world are developing countries. Most developing countries have extremely low penetration of insurance or Takaful. It doesn't matter which one we're talking about. They're both in the same boat. So I like to use Pakistan as an example because that's something that I'm working in, and it gives you an extreme situation of how bad it can be in terms of that penetration. So when we started Pakata, we actually got a survey done to try and understand why people don't use insurance. Because we were the first life Takaful company. The first general company had started some months before us. So we got a survey done with some students to see where the problem lay. And we realized that most of the public, when you ask them why they're not using insurance, their reason will be that it is haram, and that's the end of their discussion. But when you would probe further and ask them, do they do banking? They would say yes. And then you would ask them, where do you have your bank accounts? And they'd mention the whole list of conventional banks. Then you would ask them that, are they current accounts? Then they're like, no, those banks give very good returns. I have savings accounts over there. So you begin to realize that their reason for making insurance haram has less to do with Sharia as the root cause, and more to do with the fact that they don't know why bother with this product. I mean, like you said, it's a grudge product. And in many markets, it's actually, and unfortunately our sales team actually says this. They say that, look, we're selling a push product. Nobody comes and asks for an insurance product. Like they said, you don't wake up in the morning thinking, oh, I'm going to get an insurance product. But you do wake up in the morning thinking, oh, I'm going to get that new Toyota Land Cruiser. Why don't you think about insurance that way? You do the moment you find out you're going to die in 6 months, or the moment you find out, oh, I'm going on a long trip, I need to make sure my spare tire is in the back of my car. So when something happens, it kicks in. And so eventually the survey found that the vast majority of people are either ignorant of the benefits, or they just don't feel that there is a reason for them to go down this road. It's a waste of money type thing. In fact, when I joined the Takaful company, My wife, who I would consider a fairly educated lady, she's a graduate, she's this and she's that, she asked me, why would you want to work in insurance? Nobody deals with insurance. And this is a English-speaking, well-educated individual. Her example was, well, my father would get a policy every year and we'd never benefit. And I'm like, what if he hit the car? Then he would benefit. Well, nobody thinks that far. So in response to the whole topic, the awareness that is needed. Now look, for example, recently in Pakistan, we've had so many changes regarding AML, KYC, all due to the FATF initiative that the world was taking. Now over there, the regulator grabbed the bull by the horns and started pushing forward. Because they felt if we don't do this, this is going to cause a problem. If we don't increase the penetration of insurance, we already are living the problem. Most of the developing world, the government doesn't provide any sort of support for anything.
Yeah, absolutely right.
So is insurance not a no-brainer? But who is going to tell them that? And the reason the regulator needs to be involved is because the regulator has that capacity, that power, that legal edge to be able to make these products bundled products or required products. So for example, any car financing done through a bank automatically has insurance or takaful on it. No brainer. So as Islamic banking goes up, takaful automatically goes up. Can we not do that for people's health? Can we not do that for their lives? Can we not do it for children's education? So yes, I as a practitioner, it's in my self-interest. I'll have to use my shareholder funds because our Sharia board will not allow us to use the takaful funds for marketing.
Thank you very much, Brother Azim. I think for the audience, it's very important that how we drive the takaful penetration rates and increase the asset. I will come to you, Dr. Yusuf, shortly. I think for the audience, just ask yourself, how many times you enter a car and you feel the necessity for you to put the seat belt, but you don't really feel the necessity to have an insurance or takaful. So I mean, this is just a question. You answer it yourself. Because at the moment you enter a car, you want to put a seat belt. But when someone talk about takaful, what's your response? So I leave the answer. You answer yourself on that. Now, Dr. Yusuf, how can we increase the penetration rate? Please.
Assalamu alaikum. Thank you. First of all, I want to thank to you for having me. It is great pleasure. And I want to touch upon a bit on Daryl's discussions. He referred to stability. Yeah, it is important, but we should learn how to make money from instability. Otherwise, resilience will never come to us. Yeah. This stability is qadar, natural phenomena, but instability also. So we should learn how to make money in both positions, and then the resilience will come. If we cannot make money during these disruptive times, unstable times, then we can never see the resilience. So another thing, Azim said, why we cannot sell health insurance. We cannot sell because our distribution channel, it is a distribution channel issue. Yani, yes, takaful increase, it is penetration with the increase of Islamic banks credit penetration. Yani, because the takaful companies use banca takaful for their distribution channel. We need to change some things, change the game. In distribution channel, we need to have some technology abilities, and this comes from conventional mainly, then transfer to Islamic. We should be leading in some cases. Another thing is awareness. All our brothers mentioned. Yeah, it is issue. As one of the Islamic financial literacy scale developer, maybe first Islamic financial literacy scale developer, because the previous studies are Islamic banking literacy scale. We see a fourth dimension different from conventional financial literacy scales, and we understand this fourth dimension beside behavior, attitude, and knowledge is awareness. And the regulator's role is important when regulators regulate some financial product or financial business, the awareness of the society increases. So we need to increase this by regulating properly, and tekaful companies should offer efficiency. New products, of course, important, but many of us doesn't have product development department. Many of us doesn't know even what is product development process. We have never thought about engaging Sharia bodies to the product development process, and we have such difficulties we need to solve. It is another issue on the company side. But in any case, new product can make huge change, huge change. Ahmet Bey here, Kuwait Türk, introduced gold account, and it is another league player now in Turkey. But the well-known products should be offered efficiently. Without offering the well-known products, you cannot offer some new set of products. So we need to increase the efficiency. To increase efficiency, we need all distribution channel improvement, education of the operators, staff, education of the society, increasing awareness. We need all of this. The main issue is behind the penetration rate is the efficiency problem, I suggest. And for increase the efficiency, we need a collaborative work from government, from regulator side, from company side, and even the other segments of Islamic finance. They can play a vital role in improving tekaful industry. These are the issues for penetration rate. I can refer.
Thank you very much, Dr. Yusuf. I think you have also, in a way, summarized the key issues that will drive penetration rates and increase the asset size. One is the change of distribution channels, the idea of having a product development focus department to be able to develop more products and services, as well as the collaborations among the regulatory and supervisory authorities. And of course, education. It's all about education. I'm sure, I mean, so it's like just a kind of joke. Someone was saying that you want to sell insurance, sell it to the passengers on a plane. When the flight is going into turbulence, then they will easily sign up, right? That's really, I mean, it's weird, but I think it makes sense, all right? So I mean, as a takeaway for this particular round of discussion, looking at how do we increase the penetration rate, I think these are very, very important points that we have highlighted. Now, moving forward to innovation and accelerated digitalization against the increasing need for creative product and distribution channels that you just mentioned, Brother Yusuf, youth and technology as an opportunity for tekaful. Now, maybe perhaps I'll start with you, Brother Azim. Given the strong accelerated implementation of technology across most of the Muslim world, and why do we not see the same implemented in our tekaful, perhaps product and distribution channels? Why we don't see that?
So many jurisdictions, the regulators have set up small sandbox or incubation centers where they're encouraging insurtech startups to provide those sort of ideas. Unfortunately, a lot of it is still very much in its infancy, in that we haven't really seen the proof of the pudding, and because we've never really been able to taste it. It's never really been effectively implemented yet. But people are working on it. It's not like they're not. It is something that we're moving towards. But again, it comes, if you look, I mean, I know a couple of companies in Pakistan on their private level tried to implement digital insurance, small ticket products, based on a scratch card or something along those lines. It didn't really work out. And maybe it's before its time, maybe it's still some years away, but because people were not really inclined to want to buy it, Nobody bought it. Maybe if it's bundled with something else, so let's say I know a company in Pakistan that offers consumer financing for motorcycles and mobile phones, small ticket, not very large, not very expensive items. So they wanted to provide a protection element to their borrowers. So they came to us and we offered them a natural death product that they could bundle. And when they heard the price, they're like, no, we can't afford this. Give us accidental only. So we gave them accidental only. Again, they were like, well, okay, this is not too bad. Then when we offered them telemedicine, which is a living benefit, again, bear in mind, I'm not going to die. I don't need to worry about that. But what do I get while I'm alive? So when we offered them telemedicine, again, for a very small cost for the whole year, for the whole family, they were like over the moon. This is like great. So again, it comes down to that same element of we don't value protection as highly as many developed countries do. And even in developed countries, I was just discussing with Daryl last night, I mean, insurance is not something that you really care about per se. It's just something, and because in most Western countries you already have your state-provided protection, it usually suffices. So the concepts are there, the initiatives are there. Like I said, maybe it's before its time, at least for most developing markets. But it is something that you will eventually start seeing. We've already got, at least in Pakistan, we've already got mobile phone companies offering very small, they'll give you a call on the spot, 50 rupees, X amount of cover. Again, is the person buying it because the lady on the other end sounds very nice and she's pushing it? Or is he buying it because he genuinely needs and realizes he needs that product? That's where that awareness gap basically comes into it.
Yeah, I think, I totally agree with you in that respect. But I think the issue is it has to do with a lot of initiatives and innovation from the takaful operators. They need to come forward. They need to engage as well, not only with the regulators, but as well with the governments, because we all know that it is made mandatory in all jurisdictions before you renew your vehicle license or road tax, you must take an insurance. So, I think this is the kind of push maybe perhaps that the market players should maybe initiate and engage with the government and push some of this component. The governments are as well looking for money in these recovery times. So it will be good maybe to initiate some kind of policies where the government will have some benefit in it by reducing some of their expenditures, maybe in taking in healthcare and so on, when the citizens take some of these policies. So I think these are some areas that I think can be looked at. And then I think what the industry want to see is that they want to see the takaful operators coming forward, moving forward to push some of these things. Now, why do we, in terms of the innovation, Brother Kashif, what do you think? What should we do?
Actually, Mr. Azim rightly said, because this is not a psyche of the people to buy insurance product by their own will, unless they don't see there really a need. Okay, and need must be in a forceful future right now. Otherwise, they cannot wait for the long to have a claim. But as compared to the Islamic capital market products and the banking products, insurance product has different aspect. Actually, whenever there is a bank branch, okay, many individuals go to the bank branches to have the service. Okay, but do you think that the people go directly to the branches of the insurance company to buy a product? Very likely. So very unlikely it happens actually. Why? They need a push. For example, if it is a mandatory product like the health and the motor, people can go to the branches to see the prices of different companies, and they have to buy actually. They have to buy actually to comply with the laws and regulation. But for the life products, let's say, they have to buy for their own for the saving or for the protection. They need a push. So that's why we feel that the life products is mostly sold, through the agents, brokers, and the sales staff by pushing the person. There are several meetings done with the potential clients to engage one person. So it means if we go for the innovative products will not attract the customer directly because they don't see the need. Okay, they need a push by the human face-to-face interactions. So these actually things little bit, slow down after COVID, when they realized that there's a real need of the systems, and the people couldn't go outside to buy the products or something, and they started to use the system for their offices, meetings. Then they realized there's a need of the systems and innovations. That's how there are some trends. And for example, in Oman, we introduced we control the pricing of the mandatory products of the health and the motor. For the motor especially, we have put a condition that, okay, for each type of the policy, and with respect to the different body vehicle type, we put a minimum and maximum pricing. And if company want to compete each other, they might have to reduce the price, but nobody can. So we give a 10% discount you can give to the customer, okay, if you are selling your policies online, either through website or either through mobile application. Now we see a lot of uptakes. So I think that's kind of thing we should introduce something in the market. Actually we are not giving this 10% discount at the cost of the company, because they will save the broker commission and agent commission out of it.
Do you think it's high time that we start bundling capital market products like Sukuk with insurance, like for the underlying assets as well as for the banking products? I think these are some thoughts that I think I have, which I can share with the panel. Is it the right time that we start bundling some of these Islamic banking, Islamic capital market products with insurance, so that the underlying subject matters or assets that are in these transactions are forced to be taken insurance? Could it be one of those?
Yeah, it might be a solution. For example, in order to promote the takaful, the capital market regulator and the Islamic banking regulator can also introduce one thing, that all the Sharia compliant underlying assets should be secured through takaful, and also all the Islamic banking and their windows, their own assets should be mandatorily covered under takaful, and also the customer's asset. They cannot force, but they encourage to go for the takaful coverage.
Okay. Thank you very much. I think, Darrell, what's your take with regard to the opportunities and the advantages that you think the TO have at this accelerated digitalization time in the fourth industrial revolution era?
So I think the opportunities are huge, and I don't think the opportunities need to be brand new. I think there's lots of opportunities to copy. In some of the discussions we've had, I mentioned that the interesting thing about emerging markets is that what you tend to see is generational jumps. Most people in emerging markets have a cell phone before they have a car. They have a cell phone before they have a nice house. They prioritize those types of things. So it is an example from an emerging market from South Africa. My watch, my Apple Watch, my health provider bundled it and gave it to me for free. But it's not for free. That is the purchase price to buy the data that my health provider gets from me. Now they know how many steps I walk each day. They know my heart rate. They know how much sleep I get. And they can incentivize me to act differently. They can charge me differently based on my health profile. The same insurer then comes to me and says, all right, you've got the health product. We'd like to offer you a car product. And we will put a tracker in your car. The car measures how fast I drive, how safely I drive, how much I brake and how much I don't brake. It's giving them data again that helps them fill the picture about me. When I have a claim in South Africa, I don't go to a panel beater. I take a photograph of my car on my cell phone and I email it to them. When I have a claim on my health insurance, I take a photograph of the bill and I send it to them. They're doing everything without personally having to see me, everything based on a technology platform. And now recently what they've done is they've taken all of that data that they have from my health policy and all of the data that they have from my vehicle policy, and they're trying to sell me a life policy. Because now they understand my life. So use data and use mechanisms to get that data.
So you expect the takaful operators to leverage on this data?
I think it's a system that takaful operators can copy from other parts of the world. There's no reason, there's nothing that is uncopyable in that model. And I think there's no reason why it shouldn't be, why takaful operators shouldn't be able to access it as easy as everybody else.
Excellent. Dr. Yusuf, what's your expectations for innovation in takaful in the next 2 to 5 years? What do you think as a regulator, what do you expect to see coming forward if we are to really tap into the opportunities that we have?
What I would expect to see is the change of the marketing strategy, Brother Bello. There is an old-fashioned marketing strategy in Islamic finance industry to market their existence. Okay, we are Islamic, yeah. why I should use your product? Because I am Islamic. Okay, but this strategy is already consumed by Islamic banks. So there is nothing left for Tekaful. And still Islamic banks are using the same strategy, and Tekaful started with the same, but we need to shift this. The most innovative attempt would be shifting to a new marketing strategy with the products and the efficiency, I guess. So the climate is changing, the risks are increasing, and the variety of risks are also. So we need to understand the trend, and we need to adapt our businesses. And if Tekaful can do this, can lead the Islamic financial industry as well, and we can solve a problem that many of the Islamic finance countries are bank-based economies. So with the lead of Tekaful, we can have a capital market-based Islamic financial industry at those economies. Then this would lead the economies shift to a better, well-developed economy level. Yeah. So I want to emphasize those, but we are working in Turkey. We are working on some proper innovative products, but to mitigate the risk against this change, the climate shocks and other issues, we need to change all the structure of all the products. Yani, if we are offering some like motor insurance, we need to consider if it is electric car or some other car. If we are offering a premium level for a company with carbon footprint score is high or low. So this should be considered when calculating the risk premiums indeed. And Tekaful can regulate the real industry by this way to shift, to push them to shift to decrease their carbon emission and their other environmental problems.
Yeah, I think you raised a very important point. I mean, climate risk, disasters, and these are all important areas which I believe in the past, before the pandemic, there was a real focus and discussion on the use of Tekaful for focus-based financing for disaster recovery. I don't know, what do you expect to see in that? Do you expect to see that discussion coming back to the table, or a more greater focus on that?
Sure.
area?
If we can manage this, if these Tekaful operators or any other insurance companies can motivate the companies to decrease their carbon emission, then the whole other risk at the other side will decrease as well. So the loss potential of the insurance companies and Tekaful operators will decrease. So we should use these climate issues as a leverage to decrease the upcoming crisis, upcoming risk, and upcoming loss for Tekaful operators. It should be on the agenda, and very recently, Turkey introduced TOG electric vehicle. So we are studying on a project to offer lower level premium product for those cars. Yeah.
I think we are fortunate to have the Director General of the Islamic Development Bank Institute here with us, and I believe they are working on a number of research areas on Tekaful related to climate change. I hope this discussion will give the opportunity for ISDB to hear from us, and then to take on board some of this feedback that we are given. I think these are very, very essential areas. Yes, climate change, disaster recoveries, and initiatives involving Tekaful are very, very essential. And I think ISDB is already working on that area. I think hopefully, maybe in a future discussion, we'll have opportunity in the next conference to discuss more details on that. Now, coming back to the last part of the discussion of the session, which is basically the need for inclusive reporting and disclosures. This is an accounting discussion, and I think it is, this is an AAOIFI conference, and this is very, very essential. We already have, as I mentioned at the beginning, a challenge in the industry by the revised or the new IFRS 17. So it's quite challenging that in certain jurisdictions, the regulators requested the takaful operators to report based on IFRS. In certain jurisdictions, the regulators require the takaful operators to report based on IOP standards. So now we have the opportunity to have Darrell, and we're all IOP, and we would like to hear perhaps from Darrell, can the takaful industry adopt the IFRS 17? And if not, what are the issues and the challenges that you think need to be overcome for them to be comparable or compatible with IFRS 17?
Thank you, and I think it's just worth picking up something you said before I start on 17. We're talking about resilience. One key element of resilience is transparency, and particularly in the insurance industry, understanding that the insurer is going to be there, the takaful operator is going to be there when you need the product to pay out is critical. So transparency of reporting, whichever format you use, is a critical element, I think, to resilience. IFRS 17, can it be used? It is certainly been applied by a number of countries successfully from the processes I've seen.
Can be used or cannot be used?
Can be used.
All right.
It has been used by a number of countries, in a number of countries, for their takaful industry. The takaful industry has worked through the process, and they believe that they can comply with IFRS 17 and comply with the requirements, the Sharia requirements that overlay that. But I think the most important thing here to say is that takaful is not the same in every jurisdiction. Takaful products, we tend to talk about it as though it's one thing, but it actually has multiple different strands to it, multiple different elements, and I think it's not appropriate for me even to say that it could be equally applied in every jurisdiction. What I think needs to happen is regulators, accounting professionals, and others within each jurisdiction need to have conversations, need to be talking to each other, need to be understanding those elements of their takaful industry that are more complicated. IFRS 17 is principle-based. That usually means you can make it fit most of the situations that you need it for. But an example you mentioned earlier, card, is a good example where there are complexities applying IFRS 17. So understanding those complexities, talking about them, and ideally resolving them is critical if you're going to actually apply the standard.
Thank you for that. I think it's encouraging for that remarks from you, and it's very realistic because the takaful models vary from one jurisdiction to another. We had challenge at the IFSB in categorizing the model that is being practiced in Turkey, for example. This is a totally different model of takaful that they have. Now, Mamar Kashif, as a regulator who is involved also in IOP standard, you know, IOP has been trying to come up with standards that is well encompassing and that is in line with the IFRS standard. Do you think the takaful operators, particularly the takaful fund that is required to comply with, to apply IFRS, will be able to apply the upcoming IOP standard? And what is the status of that IOP standard at the moment?
Actually, you know, the very first time IFRS 17 is issued for the insurance accounting. Before it was IFRS 4, which is not for the insurance accounting, actually, it's only for the presentation and certain disclosures. So it's the very first time the ISB has issued a particular standard for complete, comprehensive accounting and reporting for the insurance. And obviously, but I believe that IFRS framework is built without considering the Sharia compliance issues and without considering the model of takaful itself. So I don't think so that if the company is complying 100% IFRS, they can claim that they are adhering to the AOIFI standards or compliance standards as with the takaful model itself, because there are a lot of differences. For example, if you talk about the IFRS 17 particularly, and why it cannot be saying that it is compliant with the Sharia compliance, model is different because the contract is totally different. In the IFRS, this insurance contract, which is a remunerative contract, where in the takaful, the contract is non-remunerative, is based on tabarru or donation. And because of this science, actually, the whole model shifted in different way. For example, the reporting style is different as per the IFRS 17 and the new phase AOIFI, where, you know, the structure of the model says that the shareholder fund has to be kept separate with the participant funds. So shareholder fund can only deal with the shareholders' money and their investments, but the participant fund can only be used for the purpose of their takaful operations specific to that. And the reporting is different, and there are some internal, relationship that the shareholder is managing the participant fund on the basis of some operator fees. These elements are missing in IFRS 17. And for instance, there are not only the direct issues relevant to the takaful contract, there are some elements which the FAS is covering. For example, the requirement of the Qarz Ahsan is there, okay? But the IFRS doesn't talk about the Qarz Ahsan, where and how. And there is a need for the impairment testing as well in the shareholder fund when the Qarz Ahsan is provided to the participant fund. And also there is one concept which is called hiba from the shareholder. This kind of the concept is not available in the IFRS 17 standard. And there also a thing that, okay, if the shareholder is going to establish one takaful fund, they have to send some seed money. How to deal with the seed money is also missing. And there are a lot of actually, for example, reporting style. Now under the AOIFI FAS, we have been asking that not only the institution or the operators level financial statement has to be produced, the fund which they are managing, this is participant fund, by the shareholder is as a managed fund. They have to report it separately. Their financial position, their activities, they have to report it separately. So there are a lot of differences in the IFRS. And not only this, for example, in the calculation side, if you go for the calculation of the CSM, we say in takaful it is takaful residual margin. Okay. In the CSM, we built all the expenses with the company is bearing in the future cash flows. Okay, to have a net present value or discounted value. So there are two issues. First of all, the expenses. Which expenses need to be taken care of by calculating TRM or CSM? In the insurance, we take all the general expenses, commission, whatever. But in the participant fund, it is not allowed. Because IFRS 17 is relatively to be applied, particularly in the participant fund mainly. And there is one expense which is called wakala fees. Wakala fee can be inbuilt in the CSM calculation, but not, or TRM calculation, but not all expenses and commission. So there is a lot of difference in the profitability and the technical reserving side. And discounting is also one of the issue under Sharia. On all the liabilities, we cannot allow the discounting factor. There are some issues because under the Sharia that if there is a one receivable which is become then you have to settle by this amount, you cannot discount it.
Okay. So in a nutshell, the IOP FAS is really robust.
Very,
yes.
Exactly.
So I mean, I would like to echo, I totally agree with you as a member of the IOP Accounting Board. I believe the IOP has taken all the necessary steps in ensuring that the takaful operators have no worries they don't have any worry when it comes to compliance with the IFRS requirement, because all the specificities related to takaful operations, the IOP, the new standard of takaful has taken care of that, and we believe it's not in divergence with the IFRS standard, and I believe the standard will be a great and useful one, and it will really promote the transparent and prudent presentation and disclosure for the takaful institutions.
I would like to add one more point. For example, in those jurisdictions where only IFRS framework is applicable, where they did not apply the AOIFI standard previously, how they did actually? Because, for example, Pakistan, Malaysia, and Uganda recently issued, takaful accounting regulation for their takaful accounting guidelines. Malaysia has issued financial accounting guidelines, and UAE has issued financial regulations, and Pakistan has issued all the accounting regulations plus accounting formats for takaful. Those jurisdictions which are mainly IFRS compliant and they have not adopted the AOIFI standard, they are covering up through the regulatory regime. Okay. In most of the countries.
Yeah, I mean, adopting IOP standards or IFSB standard is a secret. Some come out and say that we adopt this standard. Some doesn't come out and say because they took the standard, we made our standard free, readily available on our website. So they will take it, copy it, use it as a policy guide, as a basis to develop their policy. So actually what we, either in IOP footprint reports or in the IFSB implementation report that we issue, normally we underrated those jurisdictions or the numbers of those that adopted our standards. Because some take the standards and use it as a guide to develop their policy without coming to public outrightly and say that we are using IOP standards in developing our own policy. Yes, Darren, you wanted to...
Just one additional comment on that, and I think it is very important that the ISB and AAOIFI work somewhat hand in hand. A lot of what you've mentioned there is complementary to IFRS 17. So it helps you better apply IFRS 17. And I think in the perfect world, it will be absolutely awesome if you can be compliant with both.
Yeah,
and that people acknowledge that.
Yeah.
Sometimes there are things, and card is a good example. Discounting, as you mentioned, is a good example where you can't be compliant with both. You one or the other. But for most of these situations, you can, in fact, be compliant with both, and that's a complementary process.
Absolutely. I mean, that's why we have greater coordination with even ISB. Both IOP and IFSB are all members of the Islamic Finance Consultative Group for the ISB. And then we share our own views, and then we have meetings, and then we look at what are the issues that they have. So I think there is a greater coordination of that, and this is just to make sure that these Islamic finance institutions in certain jurisdictions whereby they are mandated to apply IFRS, then in that case they don't have much issue, and the divergence is actually being reduced to a minimum. Now, Brother Adim, in terms of presentation and disclosure requirements in the IOP upcoming pass that will be soon be issued, are these different from what you are currently implementing related to IFRS 17, or maybe if you're already implementing the IOP pass, then what's the difference? That do you think it will be costly? There will be some additional cost element in terms of application of the standards?
So at least again, because as you rightly mentioned, every jurisdiction is going to be working in a different way, and even Takaful models are different. So there will be differences there. Just picking up the Pakistani example, we're currently going through the implementation of IFRS across the board. It's sort of a regulator come down on insurance, Takaful, everybody. Granted, those questions are there that we were discussing yesterday about the Waqf pool and how to manage all of these. Regulator does not have an answer yet. We are hoping, and in fact it looks fairly strong, that they will be implementing AOFI standards for the Takaful company. So that will make our lives much, much easier. We can move forward, and as it was rightly mentioned, they fairly complement each other, and that way we can then not have to deal with the issues that are coming into that. Is it going to be costly? Yes, because as we were discussing yesterday, IFRS 17 is so 360-degree in affecting every aspect of our business. We are literally expecting to have to bring amendments to all our business systems, many of them imported from other companies in Malaysia or here or there. So we're expecting to get a fairly fat bill by the end of the whole process. So it's not something we're looking forward to, but obviously it's something we will have to do eventually.
All right, Dr. Yusuf, I mean, with regard to the financial statement prepared under IFRS 17 and IOFI standards, do you think will be comparable at the end of the day? As a regulator, do you expect them to ensure that if they adopted IOP standards, it must be comparable with the IFRS 17? Do you want to enforce that?
First, as of 1st January, these Turkish Takaful companies, insurance companies will implement IFRS 17. Yeah, but it is more comparable compared to IFRS 4. Yani. It is better, it makes me happy. But to implement the IOFI standards, we need to set the model first. Okay. The issue is model compliance to the IOFI standard. And you mentioned Turkey used to apply a different model. It is removed now.
It's good that you said used to. So yeah, it's no longer effective when?
Alhamdulillah. And our presence here is to let you know this and to increase our compliance with IOFI standard, to increase our collaboration, because Turkey will be the fastest growing Takaful country in the next year. 4 new Takaful operators are coming. And already Takaful company established. It is state-owned company. It has strong ties and strong capital. So we will change the game in Turkey. We want to have at least leadership in at least one segment of Islamic finance. It is very difficult to make it in banking, but in Tekaful we can succeed it, at least if we can be a leading country in one of the segment with our both market share and compliance, then we can change the game, inshallah. But that is important what I am expressing, that both market share and compliance. Not market share, we are not on that side anymore. We are more on Sharia compliance side for now, but we believe that will take us to the market lead, inshallah.
Thank you very much, Dr. Yusuf. Our time is over. I'm not sure whether the Dr. Rizwan is here, can give us just 5 minutes. We take Q&A. All right, okay. Are we given some? You have a question? All right, so we will allow for like 3 questions, if possible. So we have Brother Umar, yes, Doctor, and then one more. Okay, one from. So there's 3 questions. So we can take 3 questions because we don't want it up to the time of the next session, so that. So maybe perhaps can someone give the mic to?
I think I should be the first one. My name is Kamran Sherwani from ADCB Islamic Banking UAE. First of all, Mr. Danbata, you said that we should offer takaful while there is turbulence on the flight.
No, I did not say so. I said it's a.
I would focus on istighfar at that time. Okay. So I'm just asking that is there a role which the standard setting bodies can play towards the product development, which eventually results improvement as far as the disclosures are concerned?
Yeah, thank you very much. First, let me clarify what I said. I saw as in a social media clip, someone was promoting to say that we sell takaful while the flight is on the turbulence. So it's not Dr. Dambata that said that. So to clarify that. Now, in terms of product development, I think in the case of the IFSB, we have since 2018 introduced what we call Innovation Forum. And the most recent one that we had was in Doha this year. In this forum, we try to promote innovation and discussion on new initiatives related to across all the 3 sectors. And I believe a lot of market players are regulated benefited from that. And at the end of the day, we also published the precedents for this innovation forum, and we publish it in the IFSB website. So I think I would like to recommend that we see more of this forum being established. Maybe perhaps I hope you can have our own, or we can have it jointly for the industry to have more innovation discussion. As I mentioned, just now during the discussion, I was just thinking, why can't we start bundling takaful to ICM products, Sukuk products, and Islamic banking products? That maybe the assets needs to be given insurance, then we should make it as a condition. If we want to really drive the asset and the penetration rate, the asset size, and then we need to start bundling takaful into some of these products. So I think this is something that I think we can be looking at in the nearest future. Yes.
Thank you very much, Dr. Billo, and actually it was very enlightening discussion. My mind is like, we have been thinking this thing earlier, and today it was discussed again about the size and the growth. So actually I have a comment which converts into a question. The comment is that the banking regime also have capital adequacy requirement. Insurance regime has, capital adequacy, minimum capital and solvency requirements. But the banking has some ease, like, some sort of support is there from the regulators as well as from the system. So for example, if I am a small bank and but I can still take deposits, because then only for the purpose of maintaining my car, I will have to put that into zero weightage or minimum weightage assets. Like I can take as much as deposits that I like, and I can put them in Sukuk. My capital adequacy will be there. You don't put a bar on me. I don't have this facility available with regard to insurance. Yes, you can say, okay, you can go to Ritakaful. How much? How many Ritakaful are there? What is the size available? I'll have to go to conventional. So the point is that here we have got a natural constraint which is much bigger than banking, that I do not have a facility to enhance it. Now, even on the banking side, you have deposit protection scheme. Actually, regulators are running the deposit protection schemes and insurance. But on insurance side, takaful side, you don't have anything like this. So my question is, what needs to be done by the regulators together to find out as a system that how they can provide some equal level of opportunity for takaful to grow without getting into that significant issue of solvency? Maybe by creating the common pools or something for creating resilience, and that can help. Again, I know it's a long comment, but the question is small. How regulators can help the Islamic insurance or takaful to increase the size without significantly putting the capital?
Thank you very much. I think Brother Kashif and Dr. Yusuf should respond to that.
Yeah.
Yes?
Actually, the risk with the banks and the insurance is totally different. In the banks, what we get the money as a deposit, we have the only limited liability. But in the insurance, we get the premium of only 1%, and we have the 99% multiplier risk effect there. So we need to have a solvency level. There are two kinds of the capital level. One is the minimum capital, and one is the solvency level, solvency capital. So minimum capital is just to have a startup, to invest in the system and the people, and to write the policy, and as a startup level to initiate a transaction. But this risk-based solvency is actually based on your risk exposures. It can be overcome through the good reinsurance coverage or takaful coverage through the good ratings. Actually, for example, in this year, March 2022, in Oman, we have introduced the risk-based solvency capital. Previously, it was one-line formula, and every company has to comply with this. Either the company is small, either the company is big, they have to comply with the same amount of the capital, capital and the solvency capital both. But this time, we have totally changed the regime. If you are a small company, you need a small capital, and if you are a large company having the good exposure with the risk, then you have to have a larger risk capital. So that's how we are managing. And there we are giving them cushion. If your reinsurance coverage are so good with respect to the high-rated takaful reinsurance companies, your effect on the risk is less. So that's how we are managing. But if you compare with the banking sector, it's totally different ballgame. Up till now. And also the risk exposures.
Brother Yusuf, you want to add something?
Pooling, state-supported pooling is a good solution. We have such experiences on the motor insurance, disaster insurance, and agriculture. In this model, all the takaful operators are gaining their commission fees. That's all. But the risk goes to the pool, and the pool is supported by the government. What is the issue in Turkey? But there is issue in Turkey. Some of those pools doesn't have Islamic window, so we are just establishing those.
All right. Thank you very much. All right. So maybe you and the lady there. Thank you. Yes.
Thank you very much, Dr. Bello and the panelists for this very insightful session. My question is related to development of the takaful sector. I'm from the ISDB. Most of our member countries, the takaful companies, they focus on motor takaful or life takaful. We find that there is an issue with the agricultural sector whereby this is not really covered by takaful companies. I would like to know whether there is an appetite to offer agricultural takaful and perhaps also micro takaful. And what could be the challenges, and what do you think, the ISDB could do to encourage, the takaful, industry to promote, agricultural takaful, to support the agricultural sector? Thank you.
Thank you very much. That's a great question. I'm coming to you. Brother Azim, I think you can take this question. Just to add to your point, actually, it's not only agricultural sector, but as well trade financing. Trade financing has been a great volume, and then there has not been much involvement in the takaful sector. Maybe perhaps a takaful operator would like to hear your views. Do you have such kind of arrangement for agricultural financing? Agricultural takaful, as well as maybe any other initiative that you think is coming to your mind at the moment?
So on the agricultural side, of course, wherever a financial institution is involved, whether it's with trade finance or any other requirement that, let's say, an organization is picking up bulk agricultural produce, they will obviously inevitably go with a requirement that we need coverage for these goods. Now, whether they're in the ground still, or they're in a warehouse, there will be some level of coverage that will be required. Unfortunately, at least, again, taking Pakistan as an example, which is a predominantly agrarian economy and very dependent on its agriculture, if I were to ask that, does the farmer or the landlord at the very onset look at getting any sort of protection, my answer would be no. But yes, the moment there's a financial institution involved, yes, the protection automatically becomes a requirement. Again, as Brother Umar rightly mentioned, that there's often an issue of retakaful capacity available for agricultural produce, because again, as Brother Kashif mentioned, the rates are really small, but when the claim comes, it just goes, everything goes completely haywire. And the floods we saw recently were actually an eye-opener, and so many of the government departments as well as brokers were now actively getting involved. Recently, the President's Secretariat, along with the Federal Insurance Ombudsman, actually did a workshop on agricultural protection schemes. So they invited the insurance sector as well as the takaful companies to come in and participate. So unfortunately, due to the capacity constraints, takaful companies are often a little on they're not as aggressive to get that business, whereas ideally they should be, because that is probably what the market would want as well. But again, just on a side note, where it comes to retakaful capacity, a country like Pakistan is often at the receiving end of the stick, because our currency is constantly going down. That company is obviously allocating capital for that protection for us. So when they finally get their retakaful premium, they're like, what's this? And so the rates then go up, and their reluctance to work with us goes up. It's not that they're not there, it's just that they're not as willing to be a part of it. So the schemes are there, but probably not at the level that ideally they should be.
Yeah, thank you very much. I think we are really running out of time.
If you allow me one point to add in this. Actually in Oman, we have been receiving so many issues from the participant that we don't have the full coverage available with every insurer about the agriculture insurance. So we make it mandatory that every insurer must have the agriculture policy. Okay. Now what happened, in the full year time, only less than 10 policies was issued. So still, I think there's a need from the participant side, they have to come up. Product is available. So in order to increase the penetration for this and coverage, I think the participant has to come up.
Okay, thank you. Sister, please, your question.
Assalamu alaikum.
Walaikum salam.
Yeah, I'm coming from a jurisdiction where takaful is new, and the conventional insurance are made to adopt IFRS 17. What's the fate of the takaful companies in my jurisdiction with respect to IFRS 17 adoption? And then I also want to ask, what are the standard setters, IFSB and AAOIFI, doing to accommodate the uniqueness of takaful, so that maybe after a while, the takaful company can also adopt IFRS 17? Thank you.
Okay, maybe perhaps Daryl, you can respond to that.
So I think the important thing, when standards are written, any standards are written by the ISB, they are written on a principle basis. And the objective of a principle basis is two things. It is to call it open the door as widely as possible for any products across the range. And it is to future-proof the standards so that new products that come along, new innovations that come along can still be accommodated within that standard. One of the things that is really important is getting feedback at exposure draft stage to allow the ISB to adapt its standards specifically for the elements like you've raised them now. So if there's something that you have a concern with at exposure draft level, you can raise it and it'll usually be accommodated in the final standard. But I think the biggest thing for me is the principle-based nature of IFRS standards that allows a very wide latitude in the way the standard is actually applied. And I think that comes back to the point we had earlier about the AAOIFI standards generally being complementary. They help you apply IFRS rather than contradicting IFRS.
Thank you very much. I think we have really exceeded our time, so I want to really thank the audience for your engagement with the panelists, and let's give the panelists a big round of applause. Thank you. Thank you very much. And if you have other questions, please feel free. You can engage with the speakers after the session. Thank you very much.
Thank you very much, Dr. Bella. Thank you. I'm sure everyone would agree. It was a fantastic session. Thank you very much for joining us. I think we'll have a group picture, if you don't mind. While you do that, I would like to thank you once again for joining us for this very important session on Takaful, a topic and an industry that at times is not discussed during the conferences at length. But thankfully, we are able to discuss it at least in this session, and hopefully in the next sessions it will follow as well. So thank you very much, Mr. Daryl Scott, financial consultant, former member of International Accounting Standards Board, for joining us. Associate Dr. Yusuf Dink, board member at IPRSA, Turkey. Mr. Muhammad Kashif Siddiqui, an expert insurance and Takaful Capital Market Authority, and Mr. Azim Pirani, CEO of Pak Qatar Takaful from Pakistan. Thank you very much.